All right, we're here in Amsterdam at the house of Nakamoto, and we're here with a very special guest, Anthony Pompliano, the Pump. I know you from your podcast, so welcome.
Thank you for listening.
Yeah. So how is it to be here in Amsterdam the first time?
It is my first time. I was telling somebody earlier that I flew through the airport about 15 times on layovers, but never actually left the airport. Having fun, and the weather is being kind, so I have no complaints.
What was the reason you were on a European trip, or?
My brother's birthday, so he wanted to come. So a couple of my brothers decided let's go with them, and here we are.
All right, you have lots of brothers.
I have 4 younger brothers.
Wow. Big family. If you look at the news from the last week, I mean, actually there was a premiere like this: American pension funds go into crypto. It took a lot of work. It took a lot of persistence to actually get the deal done.
Yeah, so we announced a $40 million venture fund. It's anchored by 2 public pensions. It's now publicly come out that they put $21 million, over 50% of the fund, they did themselves. And a lot of education went into it, a lot of time. But the piece I keep going back to is the CIOs at both of the pensions. These people are incredibly intelligent. They're very forward-thinking, and they're quite courageous, right? The amount of courage it takes for them to knowingly be the first to do this, it changes the risk-reward profile, and they were still comfortable. They were still attracted to the opportunity, and they did it. And so I think that they deserve all the credit for kind of seeing the opportunity and acting on it. And now it's up to us to go execute.
All right. So what are the next steps, actually?
So to date, we've made 12 investments in companies, and then we've invested in 2 funds, and we'll continue to invest that capital. I think that we'll probably announce 2 or 3 more investments in the next couple of weeks that are kind of larger check sizes. And I think we'll just continue to look for the absolute best entrepreneurs in the world that are building in this industry.
Yeah, for the wider public, so the investment is not direct in cryptocurrencies, but in crypto companies.
So 85% is not in cryptocurrencies. It's in the equity of private businesses, right? So things like in the fund, we've invested in Coinbase, we've invested in Backed, RealBlocks, BlockFi, Open Finance, CityBlock, right? A whole host of companies. And then 15%, up to 15% can be in liquid cryptocurrencies. And we will go and buy some Bitcoin with that in the future, and we'll see if we put anything else in there.
All right. So predominantly it will be in Bitcoin. I mean,
if I had it my way, it would all be Bitcoin.
Yeah. Are you a maximalist?
I'm definitely not a maximalist, right? I think I see a ton of value in things like Ethereum and some of the innovation they've pushed forward. Somebody, I think it was this guy Nolan, who's the head of research at CoinDesk, said to me, "Look, one single protocol, right? ERC-20 shook the world. It poured $8+ billion into early stage funding. It brought that capital from an area that previously was kind of boxed out of those opportunities. And I think that there's plenty of other examples. It's not just Bitcoin, it's not just Ethereum that are kind of interesting applications of the technology. And there should be no sacred cows, right? We shouldn't kind of discourage experimentation. In fact, we should encourage it. And so that means people trying everything, and the market will decide what the winners are and who the losers are.
All right. Are there some no-goes like ICO market, for instance, or do you invest in ICOs? Or
we haven't been big fans of the ICO market. Look, it's been a couple of years now that we came out publicly and said, we don't think this is a good investment opportunity. Doesn't mean that founders shouldn't do it, right? There's a misalignment between the investors and the founders in some cases, right? So as a founder, it's actually a really interesting way to fund the company, right? Because you essentially get non-dilutive capital. And so there's an advantage to that, right? You get it from a different capital market. And Yeah, there's all kinds of advantages to it. So it's not to say that founders shouldn't go do this. I think from our standpoint, where we're taking a risk mitigated approach to investing in an already risky asset class, given who our investors are, we've just chosen not to invest in that type of opportunity. But it would be no different than, somebody saying, hey, I'm a technology investor, but I don't invest in safes, right? I just invest in price rounds. And they're just choosing not to participate in investing in a certain type of mechanism, but the companies are still viable, right? Their people should still consider using all the different mechanisms. And so I think that crypto is no different.
All right. Back to the deal, actually, with the pension funds. What took them over the line, actually, to do the deal?
Time. No, I think they just got...
It took like 9 months, yeah, I mean...
So that they have been committed for quite a while. It took a long time to get the paperwork done, and really it was just they were doing something that their legal team wanted to make sure was less risky, right? They wanted to make sure it was compliant, right? And so we kind of really put the effort and time in on both sides, both from the pensions. There's an endowment, a hospital system, an insurance company that are in the fund as well. So all of those organizations plus our team. Right. So we've got a fairly large team at the Legacy Morgan Creek business that helped get that deal done. And, look, it was long. It was arduous. Frankly, it was, kind of depressing at times because you just feel like it's never going to get done. But all that hard work, I think, is important because it's going to put us in a position where everyone's comfortable going in to the investment. Everyone kind of knows what's inbounds and what's out of bounds. And I think we feel good about it, and so do they.
Yeah, in Holland we say, if one sheep is over the dam, more will follow.
I've never heard that one, but in the U.S. we have plenty of sayings that are similar, and I think that that's going to be one of these situations where, look, when we announced the 2 public pensions, I've got a number of people who reached out. Everyone from I want my pension to do this, right? So my retirement is with a pension. I want that pension to do this because I believe in crypto. To some people saying, hey, I'm on the board. I'm on the investment board at a pension. I would like to look at this. And then I think that you've got some private pensions saying, oh, well, if the public pensions are going to do this, why don't we look at this as well? And so, I don't think that this stuff's going to happen overnight. It's probably going to take another 2 to 3 years before we see a real material movement in that space. But the first ones are the first, right? And it's important to get them done. And now we need to go find numbers 3, 4, 5, and up to 10. Right, and then once we get the first 10, then we go find the next 100. Right, and go
already in talks with other pension funds, or
to get to invest, you end up talking to a lot of them, right? And so
like tens or
more than 10, yeah, for sure. And so there's plenty that they wanted to learn. They wanted us to kind of come in, educate them, demystify a lot of things. We were able to do that, and I think there's ongoing conversations just from an education standpoint, right? You'd be surprised how many people on Twitter, these email lists, etc., are institutional investors, right? And sometimes it's the CIOs and the people in charge. Sometimes it's the 25-year-old analyst who's just excited about it, right? So I think it's just the more that we can educate people, the more that we can allow them the time necessary to educate themselves, the better off we're all going to be.
Last year there were some institutions talk about institutional. I spoke to Pantera Capital. You have, of course, Barked, Fidelity. What do you actually expect from this institutional money?
Institutions, I think much of the same, right? So kind of you'll get a couple who what we call toe dip, right? So kind of 100 basis points or less, they'll slowly start to put some money in. They'll kind of pay attention, see how it goes. If it goes well, they'll put more money in. If it doesn't go well, then they'll kind of just leave that one investment. But I don't think that it's like retail investment where just, retail investors can all rush in. There's a FOMO effect and they pump the price to something. I think institutions are much more risk averse. And so they're going to look to own equity in businesses. They're going to look to make longer term investment decisions, which should be good for the space overall.
Right. I got actually a glass ball. Oh. So yeah, that's a new, we will edit this. So you can hold it and actually, what's your market prediction actually? So you're the first one with the glass bowl cup.
I'm the first one to get this?
Yeah.
Well, Well, I don't know magic, and it's only glass. So, look, from a price prediction standpoint, it is very difficult to tell certain price movements in a given period of time, right? I'm not a trader. But I do think that we have not seen the bottom. So it's likely that we will go below kind of that $3,100 mark that we saw a couple of weeks ago, or a couple, and even months ago now.
You're a bit bearish.
Yeah, I don't think that we've seen the bottom in the bear market, and so we've got to eventually get to that bottom. And then on top of that, I think that we are likely not to hit the bottom and then just immediately go into a bull market. I think it's kind of much more of a smooth transition, and so it wouldn't surprise me if we went sideways for most of the year. And so if you said to me at the end of this year, hey, we kind of went lower than 3,100, and we've been trading between like $2,000 and $4,000 for most of the year. That feels like that'd be pretty okay. And then obviously anything to the upside of that is just added benefit.
Right. Because there are no real factors that can actually pump the market.
Come in. So one of the most interesting scenarios to me would be if an ETF got approved and the price still went sideways. Because everyone, like the consensus thought is that the ETF is going to get approved and then all of a sudden the price is going to take off, right? Well, what if an ETF gets approved, price doesn't take off, and instead it just goes sideways for another 12 months? Right. I think a lot of people wouldn't expect that, or maybe ETF gets approved and it drops. Right.
That's a good thing, you say. I mean, it's more stabilization in the market, more time to build.
Yeah, look, it's for the people who have long-term, kind of thinking and outlook. I don't think they want the bull market to come back immediately, right? I think that they enjoy this kind of focus on building. They enjoy the ability to accumulate more assets, and so we'll see what happens. But I'm not very bullish on a big bull run happening in 2019. I think we just go sideways for a while.
So if you look in the ball and you say, okay, the end of 2019, Bitcoin will be around
sub 5,000. I don't know. I haven't given anyone a price. That's the closest I've come to a price this year. The short answer, I don't know, right? But it would not surprise me if it was sub 5,000 by the end of the year.
Thank you very much. The last question, it's not actually the easiest one, but what are your 3 favorite coins?
Very easy. Bitcoin,
and Bitcoin.
That's it. And the reason why I say that is it's the most important, right? The nature in which Bitcoin was created, distributed, and has grown is very important for everything else to succeed, right? And if Bitcoin was to fail, I think that many people believe, oh, that's just like MySpace. Like MySpace died, Facebook was better, it doesn't matter. Most companies are not dependent on the narrative of an industry, right? So nobody, when MySpace was failing, thought, oh, social networking is not going to be a thing, right? If Bitcoin fails, the Bitcoin narrative is the cryptocurrency narrative, right? And so if the leader since day one to today was to fail, I think you would have a narrative crisis where people would say it's over, like this doesn't work, right? The decentralized nature of it, the uncensorability, right? The inability to seize the asset, all of these components that really are kind of beautifully put together, with the mining algorithm, and then the story, right? I think it's Marty Bent who calls it like the Immaculate Conception, right? Like there's this like magical story of like, oh, there's this person or group that we don't know, but like we have a pseudonym for, and it just like got created and handed to everybody. That's not a very rational thing in most, aspects of the world, but money actually narrative is really important. Right. And so it is, it should not be underestimated how important that narrative and that conception story is. And so if Bitcoin failed, I think there would be a lot of trouble. And for that reason, it's just the most important. So it always wins. It wins like the top 50 slots in my mind. Right.
So if Twitter actually incorporates Lightning Network, that for me, it was big news. I mean,
I think it would be huge. I wrote, I think it was 2 weeks ago now, Jack Dorsey's CEO of Twitter and also Square. He said that he is going to incorporate Lightning Network into Square. He's also an investor in Lightning Labs with Elizabeth Stark. And it would not surprise me if in the future, this is much farther out, 5-10 years from now, I could see him exploring putting the two companies together. So could he take Square and Twitter, put them together, and now all of a sudden you're able to do commerce, right, where you communicate, right? I think that, again, I have no reason to believe that he's going to do that, but I do think that that would be a very interesting move on his part and not completely out of the realm of possibility.
Thank you very much, Anthony. Okay, guys, you have to check out Off the Chain. Simply the best podcast around.
That was the first take that we ever did recording that, and everyone in the room loved it. So we used it, and now people have found it very entertaining.
Okay, thank you very much.
Absolutely, thank you.
Okay.